Good morning, ladies and gentlemen. Greg Mikulowski from ForexLive.com. Today's date is July 26, 2022. I'm going to take a look at some of the major currency pairs and give my views on from the technical perspective. What is the bias? Who's winning? Who's losing? So on and so forth. Let's start with the euro versus US dollar. What we see in trading here today is that the day yesterday closed just above the 100-hour moving average. There was a try to the upside that fell short of our previous highs from last week, and also the 50% retracement of the move down from the June 27 high to the July 14th low. That inability to get up to those levels and up to the through the 50% sent the price back down toward the 100-bar moving average, where the price tried to dip below that level but could not sustain any momentum, and then we closed sort of very quietly. It was a quiet day yesterday in trading for most of the hours during the New York session. In the Asian session, we started a run to the upside, but that too fell short of the previous day's highs, and we started to move down. This time when the price broke below the 100-hour moving average, we started to see more momentum. We fell below this trend line. We also fell below the 200-hour moving average here. That's the green line at 101.619. So the bias is to the downside here, and we've seen continuation bars going to the downside. The news out of Europe was on the natural gas restrictions that they voted on that would go into effect as we head closer to the winter season, where it's going to be imperative as far as the supply goes. Russia continues to restrict natural gas through the Nord Stream 1 pipeline, and that is causing a huge concerns and huge problems within Europe. We're seeing yields move down sharply, and that is helping to push the euro back to the downside. We are at this swing area. We had a swing high here, moved above it here, and then used that level as support. On trading on Friday, the market came close to that level. Today we're moving back down toward it. We're trading just above it at 101.34. That level comes in at 101.21. Move and with more momentum below that level, we should see a move down toward the 1 par 0.74-ish type area. Close risk is the 200-hour moving average. Other things to consider: I'm going to put a Fibonacci from the low here to the high right here, and the price low today is also testing the 50% retracement of this move to the upside, this corrective move to the upside, and moving below that level right there is just a double confirmation of the more bearishness for that currency pair today. So be aware. Key support here being tested at near the 101.1415 up to 21 level, I guess, for that currency pair. Let's take a look at the dollar versus yen. Not much activity going on here in this currency pair. The range today is only 57 pips. The average trading range over the last 22 days is about 115 pips. So there's room to roam. There's always that, I could say, when you have a very narrow range compared to the average over the last 22 days, which is about a month's worth of trading. So, and we are trading near the high level after breaking sharply on Friday to the downside and breaking below this trend line. Yesterday, we saw buyers lean against the old trend line through here, which gave a little bit more bullish bias here. We've moved above a swing area, and in trading here today, the price in the Asian session initially moved down, but then reestablished support against that swing area here. So there is more of a bullish bias. It's just that it's not really running very far. The 38.2% retracement of this move to the downside comes in at 137.01. That's the next target, and then above that is the 100-hour moving average at 137.22. That's going to be key. Recall that on trading on Friday, the price did move up to test both the 200 and 100-hour moving averages. They were near converged up here, and sellers leaned against that level, and that led to the sharp move to the downside. So the 100-hour moving average is going to be key on further momentum to the upside, as is the 38.2% retracement. That 38.2 also corresponds with this low from Friday's trade as well, before the market broke below it and then used that level as resistance again. So another key level to keep in mind on the top side on further momentum to the upside. If the market should break back below this swing area for the second time today, we could go down and test the trend line, which currently comes in around the 136.12 12 level. Let's take a look at the sterling versus US dollar. This currency pair is falling along with the euro after moving up and testing the high from yesterday. Also moving up back above the 50% retracement of this move down from the June 24th high to the low right here. This came after a consolidation move. This was a trend move to the downside, so that's why I use that as the swing high right here. The 50% retracement was broken on Friday, was broken yesterday, was broken here today, but we could not extend up to the next target at 61.8% retracement on each of those moves, and we started to move back below this swing area. We have a swing low, swing high, swing low, broke through that level here, but then reestablished it. Then broke again to the downside here and tried to use it as resistance through here, but found sellers near the up here at the upper end of it. Then swing high, swing high, swing high. Broke above it, like I said, the last 3 days, but could not sustain momentum. On the downside, the price also moved back below the 100-hour moving average. That's not unusual here over the last few days. We did see some breaks of the 200-hour moving average. This one was a little bit more pronounced. This one was very small break below that level. That's where we're approaching right now, 1.1956. Get below that level and stay below that level would increase the bearish bias. Have traders looking toward this area through here, starting between 118.98 and 119.24. That would be the next swing target on the downside. Alternatively, move back above the 100-hour moving average with momentum, and we dodged a bullet. The price would have gone down, tested the 200, bounced up through the 100-hour moving average, would give more of a bullish bias. I'm going to go over and take a look at the Aussie versus US dollar, because this currency pair is testing its 100-hour moving average at 0.6920. The high price today came up to the 50% retracement of the move down from the early June high down to the low that we saw on July 14th of 50%, held like a charm up there at the 69.816 level. Started to see rotation back to the downside, where the price is now testing the 100-hour moving average at 0.6920. Moved below that level, and although we went below it yesterday, we should see further momentum to the downside. It would shift the bias down to the downside after, again, the failure at the 50% retracement, move below the 100-hour moving average, more bearish. Finally, let's take a look at the dollar versus Canada. Why? Because we did break below the double bottom here, but just barely, okay? And the price started to rotate quickly back to the upside here. We are testing and moving above the 100-hour moving average in two separate bars here at 1.28774. If we're able to stay above that level, then we're still sort of in the ballpark of perhaps starting that second shoulder here off the daily chart. A shoulder here, a head here, and we have the neckline coming across here. It's close, but if you blur your eyes, you can see the potential head and shoulders formation if we're able to extend above certain levels. Recall on Friday we did get above the 100 bar moving average, and then above all these swing areas, including this swing area right here in trading yesterday actually, and the price though could not get above the 200-hour moving average. That 200-hour moving average is now near this swing area, so that's going to be a key level on the top side. So there you have it, a look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. If you like this video, give it a thumbs up. If you didn't, give it a thumbs down. Thank you so much. Bye-bye.